Hello and welcome to Business Arena on TVP World. I'm your host, Marie Cato. Let's go to the business headlines of the day. Former executives of Orlen, the biggest energy company in Poland, will be pursued for damages. The decision was taken at an extraordinary shareholder meeting on Monday.
The decision has been muled for some time, but now it's official. Orlen shareholders, who collectively hold 75% of the company's stake, have voted to pursue damages against former executives.
We want all managers in all companies to understand that if they act improperly against regulations, statutes or agreements, they will first need to explain their actions and, if a court finds significant legal violations, face consequences.
The full extent of the damage is yet to be determined, Fonfara said. He added that these civil cases follow 50 audits and inspections, with more ongoing.
We hope some of those losses will be covered by insurance. For others, if courts rule in our favour, we aim to recover damages from those responsible.
The investigation will focus on 13 individuals employed at Orlen between 2018 and 2024, including former CEO Daniel Obajtek. In a desperate attempt to defend himself, Obajtek and other executives held a press conference on Monday morning, alleging mismanagement by Orlen's current leadership. He claimed to have filed a notice with the National Prosecutor's Office over potential omissions and investment failures. Several major wrongdoings were highlighted ahead of the shareholder meeting. Artificially lowering fuel prices before last year's parliamentary elections, unjustified expenditures on sponsorships and donations, unjustified representation expenses for board members, and unfavourable investments. But there is one major issue, according to Fonfara, which stands out: a €350 million prepayment for oil that was never delivered.
The most egregious example is OTS, a Swiss company that received 1.5 billion zloty prepayment, contrary to regulations, traditions and Orlen's history. These payments went to unknown entities, then disappeared the next day.
Further announcements, including decisions regarding the failed Olefine 3 petrochemical plant, are expected soon. Ahead of the shareholders' meeting, Prime Minister Donald Tusk commented the ongoing investigations, expressing confidence in the progress.
This is exactly what I expected from the Ministry of State Assets and Orlen's new management, to methodically clean up the mess, without politicizing it, and inform the public when ready.
Orlen is one of the several state-owned companies under investigation for mismanagement during the previous government's term. According to the Minister of State Assets, the scale of irregularities exceeds the worst expectations, signalling more work ahead.
Volkswagen is facing a major showdown as workers across 9 out of 10 German plants began a warning strike on Monday. The powerful IG Metall union has called for action after cost-cutting negotiations with the automaker's board reached a stalemate. The union's boss says the dispute may escalate into one of the toughest labor battles in Volkswagen's history.
These workers here, and thousands more, decided to express their dissatisfaction on Monday. Assembly lines at Volkswagen factories came to a halt in the morning. The IG Metall union, representing around 120,000 Volkswagen workers, organized the warning strike after a third round of negotiations ended without agreement last Thursday.
They show no goodwill. We are all scared. Many of those who are nearing retirement are really scared that they could lose their job now.
At the heart of the conflict is a disagreement over wages and job security. Volkswagen wants to cut costs, and so it insists on 10% pay reductions for all employees. The company is also mulling the closure of 3 out of 10 of its plants in Germany. Trade unions proposed measures allowing for €1.5 billion in savings in exchange for job security. But the company says that is not enough. Volkswagen wants the personnel costs to drop by €10 billion by 2026.
So currently, too many employees are producing too few vehicles. Volkswagen, with its brand, sold 2023 around 9.3 million vehicles worldwide. In the same period, the group did not reduce the level of employment. Contrary, the level of employment increased by 1% to around 684,000 employees.
Volkswagen announced in October that its profits had fallen by nearly 60% amid a slump in sales in China. The company still is profitable, but Oliver Bloom, the CEO, says that current margins are not enough to future-proof Volkswagen amidst a turn towards electric mobility.
Things are heating up in Germany, with Volkswagen employees striking across the country against possible plant closures and potential layoffs. On the bottom line today, we'll discuss the wider issues of the ailing German economy and what needs to change if the once European economic leader is to avoid becoming a distant memory. A new port terminal for grain exports and preparatory work for a second LNG terminal. These are the new maritime investments announced on Monday by the Polish government. Both of those facilities will be housed in Gdańsk, Poland's largest port. The new grain terminal will service both increasing Polish exports and grain sent from Ukraine. Poland already has 2 maritime grain terminals, however, they are privately owned. Therefore, the government has decided it should spend around 120 million euros for a fully state-owned facility. More importantly, the government wants to spend almost 200 million euros on preparatory work for a second LNG terminal, which will be a floating unit, the first of its kind in Poland. A specially purposed ship will also be moored in Gdańsk. The first LNG terminal in Poland was completed almost a decade ago and has been crucial to Poland's energy transition. Manufacturing PMI figures for November are in. Many had been expecting Poland's 5-month upward trend to continue, but those hopes suffered a setback this Monday as the index fell 0.3 points from its October high.
The latest Purchasing Managers' Index survey by S&P Global reveals a further contraction in Poland's industrial sector. The index had been on an upward trend since June of this year, with many hoping that it would finally break through the 50-point barrier, signalling expansion. November, however, saw the first decline since then, with the PMI falling to 48.9 from 49.2 in October. Can this be the beginning of a downturn? Jerzy Nikorowski from BNP Paribas sees quite the opposite.
Well, basically, there is nothing in the numbers that justify further contraction in the numbers so far. The current receival of this information by the market is that either we are bottoming the weak situation or we are expecting to the rebound.
Let's look at these numbers. This contraction was mostly driven by a sharp decline in new orders, and in particular those meant for export. S&P Global's Trevor Balchin attributed the slump to weak European demand, particularly from Germany, a key trading partner. But Germany is not the only big player in Europe.
The Southern Europe is performing quite well. Italy, Spain, France, they're faring not so bad as Germany.
Investment in production is also down. This can be explained, of course, by weak confidence due to the volatile geopolitical situation in the region, but it can also simply be a result of the expectations in the investment cycle. Many decisions are put on pause as firms await the distribution of EU funds which have been delayed. These mixed signals can also be confirmed by a second straight month of rising employment, which could hint that manufacturers are forecasting an acceleration in production. Finally, costs are on their way down. November data signalled a notable weakening of price pressures. Average input prices fell for the 6th time in 2024 so far, and at the fastest rate since October 2023. So can we expect a breakthrough into positive territory to start off 2025?
We need to see at least 1-2 months to have the full confirmation of the trajectory for the coming quarters.
Overall, things are not as bad as they seem. The average PMI for Q4 stands at 49.0, potentially marking Poland's strongest quarterly performance since early 2022, if December maintains this level.
And that's all for our business news updates today. For more business stories, check out tvpworld.com.